So, welcome back to another episode of the Web3 Insights podcast, where we dive deep into innovations, builders, and ideas that are shaping the decentralized future. Today, I'm really pleased to be joined by two industry veterans, Rob Gaskell and Pete Osborne, the founders and partners at Appold. Appold is a company helping fast growth Web3 and digital asset businesses scale securely, efficiently, and compliantly. Fresh back from Singapore's Token 2049, Rob and Pete, are here to share their thoughts on the current Web3 landscape, the evolving dApp market, and also Appold's newest service offering as well around operational resilience and audit. So let's jump straight in, guys. Thank you both so much for coming on.
Thanks, Aaron. Yeah, good to see you again.
Absolutely. Rob, just to start, can you start by giving us a bit of background on your journey, what led you to co-found Appold, and also, what the initial vision was when, you set out to build the company?
Sure. So my background is tech and operations, working in the hedge fund industry and then moving into family office world. I discovered the blockchain technology while I was working in those industries, and I decided that I wanted to do that full time. So in 2016, moved into it full time. Built solutions around DeFi, privacy, and then moved into investments, and then met Pete in around 2019, and we decided there was a big gap in the market, which is this gap between institutions and blockchain technology, and the two areas not really talking well together. So we decided to see if we could bring those two industries together, as well as on that journey work with Web3 companies and the fast growth companies that we have been in the past, and now working with them to bring these industries together and bring the whole of the world to use blockchain technology. We started the company in 2020, so we've been around for just over 5 years, and we're working with blockchain protocols directly, the tier ones, as well as institutions that want to use the technology, as well as Web3 companies and dApps and other types of solutions in the space that want to get into, have fast growth into their markets.
Amazing stuff. Pete, this is your first time coming on the Web3 Insights podcast, so thank you so much for coming on. You've just returned from Token 2049 in Singapore. What were the key themes or takeaways for you this year, and how was the overall sentiment compared to previous events?
No, thanks for having me on. It was actually my first time on this particular conference. Rob and the team have been out there in previous years, but there's certainly a shift towards institutional activity there. And we saw the same in Toronto a few months back for a conference there. Big focus, infrastructure, compliance, things around real world assets. And it's less about what can be built, but really more can you scale securely and gain regulatory acceptance and ultimately institutional adoption. We still have these high yield, high risk, low governance type vendors there, but I mean we largely discount those, and I would say they're a dying breed. But all in all, it's a more grown up activity now. A couple of things: digital asset treasuries, they're very hot in the stock markets in particular. Cooling a little bit, still big point of conversation. We're seeing more listed companies utilizing digital asset treasuries as a secondary function, but they have primary operating activities. But in the bigger picture, Token is a 2-day event. We were there for the whole week. There are many events that go on around that we were part of. I think we were there for a total of 5 hours at the actual conference itself, as most of the big meetings are happening outside it. But certainly a good one and worth a visit as it's evolving.
Amazing. Yeah, no, I heard a lot of mixed reviews actually about it this year. I think Singapore in general was quite busy because they had the F1 on at the same time. But yeah, always great events to go to for sure. Rob, Appold focuses on supporting fast growth Web3 projects. How do you define fast growth? Especially in today's market, and what qualities do you look for in a project? That shows genuine long-term potential.
Sure. So a lot of the times it comes down to governance and other types of issues. Yeah, if you're looking for a fast growth company, you need to be able to make sure that the tech is and go to market is all in a line. You need to understand that you're talking to your client base, your customers in the market, whether they be institutional or retail, making sure that you're addressing that from day one, almost not taking a solution out there when it's not ready, or it's these are some of the problems we see in the industry. A lot of the, and it's been said, and I'm sure it's been said on your podcast before, sort of build and they will come attitude of our industry has been prevalent and is still prevalent. That build something and the market's just going to suddenly appear. Sometimes it does, sometimes it doesn't. And that kind of hit and miss approach is not something we want to support. We look to support companies that really know there's an addressable market, really know that they can bring the tech together, use efficiencies in bringing the tech together. Another issue we see is companies spending too long on technical challenges. Everyone's been involved probably in projects where they've spent too long, or they've had to rewrite it, or they've had to go back to the drawing board on some points. It's quite hard to build in the blockchain industry. It's quite hard to build, but there are some components now that have been tried and tested, and with the collaborative approach of the industry, you can bring these solutions together, and that also gets you to market quicker, rather than just saying you've got to build everything from the ground up. And again, we find companies make that mistake.
Yeah, no, absolutely. Pete, the dApp market continues to evolve rapidly. From your perspective, what areas of dApp innovation are standing out, the most right now? Where do you see the biggest opportunities emerging?
I think without doubt, projects that bridge traditional finance with decentralized protocols.
Mm-hmm.
So everything around your custody related, your risk analytics, your compliance ready dApps, they're the ones that we find more interesting and certainly see the bigger growth opportunities. I mean, on a different wavelength, we're looking at interoperability and multi-chain infrastructure. So solutions that look to reduce some of the fragmentation, improve liquidity flows. There's quite a bit about privacy out there, preserving that privacy and data governance, especially at the enterprise level. But we're predominantly focused on supporting teams that are building this regulatory aligned infrastructure and ones that solve the institutional pain points that exist in the market.
Yeah. Scaling operations, securely and efficiently can be difficult, for a lot of Web3 teams. Rob, how does Appold, help clients build resilient and compliant frameworks while, maintaining flexibility and speed?
Yeah, I mean, this is back to the question again, like speed to market, isn't it? And what we find we've been involved in a number of audits across the industry for financial auditors. And when we're dealing with those financial auditors and they want to close the books on companies, we go in and look at the technical areas of risk, systems internal controls, and the governance and verifications of assets. When we look at that, we sometimes find that the frameworks, the policies, even just simply the policies and procedures haven't been set up correctly or aren't being followed correctly, which means that the shortcuts have been taken. And with those shortcuts, if you build out a solution or you're supporting a solution in the space, you then end up having to retrofit some of these issues back in. And if it's retrofitting tech issues in to secure an application, or tech issues to allow it to scale, then sometimes you have to rewrite and that just delays. So you're actually creating inefficiencies by not doing it from the ground up. This is a mistake that the industry keeps making, that they think they don't need this stuff. They think it's sort of a barrier to technical deployment. It's actually not. It actually makes a lot of sense. Everyone's aligned and working the same way before a solution goes to market.
That leads us on quite nicely. Appold recently introduced a new service around operational resilience and audit. Pete, can you explain what that involves and why it's become such an important part of your offering?
Sure. Two sides of it. So Rob touched on the audit side. The financial audit work that we do, we've been doing for around 2 years, and we act as what's called an auditor's expert in the audit industry, where we're effectively helping bridge the gap between the blockchain operations with the financial assurance piece. May be aware that there aren't many auditors prepared to audit the space, and there's been historic issues with fines on certain cases. So we're really brought in to support the auditor to do all the things that they are less comfortable with. So their focus being on the financial audits. And Rob tapped on it earlier. We're looking where we review the systems, the internal controls, the wallet verifications, testing the revenue model and the systems testing, and really providing support around that and making recommendations and how they can implement and improve that. And what's spun out off the back of that is us building an operational resilience offering, which is partly from our experience being at the coalface, looking under the bonnets of some of these global exchanges, but it's also driven by industry and regulatory urgency. We look at the FCA, that what's called the CYSC 15A, EU's DORA. These are very pertinent ways of improving or having these firms improve their governance and their risk management in the space. And so we've created an offering to go in there and effectively do a lot of that work for them and position them a lot better. So in regards to our operational resilience focus, this has really spun off the audit work that we've done, because we've been at the coalface of what goes on under the bonnet of these companies in these global digital exchanges, and we can implement that into companies going forward. Some of this activity is driven by our own experience, but some of it's also driven by a regulatory urgency to improve these processes. For example, the FCA CYFC 15A, EU's DORA, these are all coming harder into play. And from our perspective, we were helping these companies really improve on that and making them more compliant. On a side note, when we look at examples, there are a number of examples. We are in quite deep conversations at the moment with the insurance industry, where a lot of underwriters are writing policies, but they have a certain lack of insight into companies in this perspective. So we are trying to find ways to work with them to bring down really the cost of policies by having some kind of, I wouldn't say verification, but having viewed what's going on inside the companies.
Awesome. I mean, there's definitely, a big increase in regulation and the attention in and around that, especially across obviously UK and Europe. Rob, how are you seeing compliance expectations sort of evolve, and how are Web3 companies adapting to that shift as well?
For sure, they're being forced to adapt if they're in those jurisdictions where regulation is coming. We have seen a shift sometimes where companies say, look, I just can't deal with this regulation. I'm going to step out that jurisdiction and move operations. That's happened in various jurisdictions around the world. As what we have seen most recently, though, is that the UK and the US tying up their regulation to make sure that they are aligned in some elements to reduce something called regulatory arbitrage, which is where a jurisdiction comes out with a very simple regulation, another one comes out with a stringent regulation, and then everyone just shifts all their focus to the easy regulation. But that's been one of the issues for the industry, is that they're maybe not comfortable working in a regulated environment. But that's becoming less and less. And people are starting to also realize in the industry that you're not going to get large volumes of activity on your services if you sit outside of regulation. You're going to have services that are regulated. And also companies now are starting to get much more comfortable being regulated, because they're starting to put some of these frameworks in place and governance in place that actually makes their operations easier as well. Yeah, there's improvements going on, but in terms of actual facts, we've got regulation coming in the UK, regulation coming in the US. We've got regulation already in Europe with MiCA. Mm-hmm. There's already been discussions going on around MiCA 2 to see what could be done to improve MiCA or to adjust MiCA for the ever-evolving landscape. But I would say that there is a genuine look now towards actually trying to adopt some of these regulations so that people can get in, stay in the markets rather than just fully exiting markets.
Yeah.
And that damages their business.
Yeah, absolutely. Beyond compliance, long-term sustainability remains a major challenge, especially for, token-based projects. Pete, what does effective business planning look like for teams, that want to move past the sort of hype cycle?
Yeah, I think firstly focus on real revenue models. We're looking at transaction fees, infrastructure licensing, trying to monetize data, and not focusing on token inflation, which has been endemic over the past few years. The priority has to be on retention and generating revenue and having ecosystem utility. We go on about it every time, but you can't build a business that is based on token price. You may have a successful ICO, but certainly in our experiences where we've dealt with certain protocols, they might have a lot of money, but that treasury burns down. And when they're not focusing on how to make money properly and spending too much money on overheads, that's not a sustainable model. I think the other side of it as well is and we keep saying, we said it a number of times here, is focusing on this institutional grade governance and focus on it early. Get that right, get that in place. You want to have independent boards, clear decision making and accountability. Investors, clients, they want to deal with people who are visible, who've got diversity there and diversity in skill sets, not just one person running the shots. And I think I'll add to that compliance. Try and be as compliant as you can. People traditionally have tried to avoid it in this industry, but it's actually a competitive advantage because it puts a lot of value into the business and it future-proofs it. It positions it and makes it more attractive for some of the big real clients and the big money.
Yeah, couldn't agree with you more. I absolutely love the work that you guys do as well. Rob, just I was going to sort of take a look into the wider industry, but before we do that, I just wondered if you could sort of, maybe highlight or give insight to some of the projects that you're working with and working on at the moment, and the work that you're doing with them.
Sure. So we did a previous podcast with you was actually was with Sheldon Hunt, who's the CEO of Sundial and Sundial Protocol. We've been working with Sundial for a number of months now, and we're helping them with the operational side, the governance side, the financial governance, as well as operational, operation. Accelerating that project by putting those things in place and making sure that we have good program and project management of the different streams within the project and improving that in the market. And we see that as a big differentiator from a lot of other projects that don't have some of those controls in place from the start because they don't have the support of a company like ours. They don't have the ability to basically put these things in place because they are running around just trying to get the tech out or the next phase of the tech out and not necessarily putting these things that allow them to accelerate into a market. So yeah, we've been quite successful with that, and and Sundial's is becoming a very good success and a good example of how to do things correctly.
Yeah.
But we're going to see other projects do similar things. It's not just unique, but it's really interesting to see the proof in the pudding.
Yeah, 100%. I think it's so core. It's, building the foundations essentially to allow these businesses to be able to, scale and grow in the right way, having all those foundations in place. So going back then to looking at the sort of wider industry, Rob, what sectors or technologies do you think will drive the next wave of growth and, investment over the coming years?
I'm a big fan around what's happening with the Bitcoin space. So I do think that there's going to be a lot of innovation around the Bitcoin space, especially with something like Sundial Protocol and other protocols that bring real usability for Bitcoin beyond what is also already good in terms of its store of value, its hedge against fiat debasement, and its also usability for payments through the Lightning Network and other things, which have all been good innovations. But there is a huge new innovation that can come with programmability, and that's where we're absolutely in the middle of that. So there's a lot of interest there, and it's going to be a big year, 2026. But also, side to that, we're going to be very busy with all the dApps. We think dApps is still going to be here. It's digital asset treasuries on listed companies, on private companies, allocating into Bitcoin again, protecting them against their fiat treasuries and other types of things that are, or the smoothing of moving money around the world as well with stable coins. That's going to be another big push. And and I would say another thing that's a bit unknown is these waves of retail activity go through in our industries. We go through waves of retail activity alongside this huge new institutional amount of effort and money coming into the space. And we've already had a notification from the SEC in America they're going to relax the rules on ICOs and on airdrops and on rewards through token issuances and things like that. If they relax the rules on that, maybe we'll have another huge initial coin offering buzz that goes on next year, and it could become like a global thing again if it's relaxed in other jurisdictions. So again, retail participation goes through waves. Institutional participation is very hot at the moment, and we're going to see more and more adoption with tokenization projects in the funds area. Asset managers are all going into this and all having projects around it. So yeah, there's a real use case for blockchain technology, use case for platforms, huge investment and other areas going into Bitcoin and Bitcoin services, and then other areas of retail participation that makes this industry, which is more than $4 trillion, it could turn into a 5, 6, $10 trillion industry over the next few years as all of this activity keeps coming in.
Yeah, for sure. I think the Bitcoin ecosystem is certainly exciting, that's for sure. Pete, for founders listening who are, looking to scale responsibly, what advice would you give them? And also, how can Appold best support their journey as well?
Sure. Focus, number one, I think, and identifying what the actual underlying problem is that you're creating the solution for. In the early days, when Rob and I set up the company, we were coming across many, many solutions. The issue was they couldn't find the problem. So great tech was one thing, but actual applicable tech was another problem.
Yeah.
One of the things we find, many of the founders traditionally in the industry have been tech natives. And as much as they create this good tech, they frequently neglect the other sides of the business.
Agreed.
And I think, again, when I said about the diversity in the kind of people you're recruiting into your business, you don't just need to bring them in, you actually need to listen to them and empower them. Something we've witnessed a number of times that doesn't always work out as well. But this build it, they will come mantra it's not sustainable. Yeah. And unfortunately, egos do get in the way of that. So you really do have to park that. I think take your time, get it right. It's not sprints, don't burn out. The market was known for these pump and dumps, do things quickly, take the money off the table. That's gone almost. It'll still be around a little bit. What Rob said about the ICOs that may come back in the US, I'm sure they'll come back under different rules, which will be a good thing. But focus is the key thing. And I think the final point on that is be more, and we say again, institutional focus. Think about that governance and how to do it properly and play that long game. I mean, Rob was saying earlier on about the market being worth $4+ trillion. When you look at cash markets, stock markets, right now, most of the trading from the equity side the retail side of the market is around 5 to 15%, the rest being institutional money. You apply that metric into this market. Obviously, there's more institutional money coming in over the past year, but if you could take it to it being 85% institutional flow, it's a monster. So get it right and really focus on that side of the business. And I guess that's where we come into it, because it's really what we've been doing for the past few years.
Yeah, 100%. I couldn't agree with you more. I've been working in the space for about 6 years now, and I've seen a lot of companies that have come and gone very quickly. They're sort of heads down in the tech, and then don't really sort of think about those other key factors that you mentioned there. So yeah, certainly an absolute need. And Rob, just finishing up, for those early stage companies and fast growth companies, founders that are looking to get in contact with you guys, how can they best reach out to you?
Sure. I mean, we have the ability to obviously connect through our website. We have a general email you can get to us on, which is info@appold.com. Please reach out if you need any support, and we'll see how we can help.
Perfect. Yeah, I'll include the links and ways to get in contact with you guys in the description. So yeah, Rob, Pete, thank you so much. It's been great having you both on the Web3 Insights podcast. Appold's approach, to combining strategic growth with, operational excellence really highlights, as we were sort of discussing what's needed to build sustainable businesses in Web3 today. And it's clear to see, that you guys are doing that for some fantastic businesses in the space. For our listeners...
Sorry, can I just add, Aaron?
Yeah, sure.
Apologies, we don't always wear blue shirts at the same time. That was more of a wardrobe malfunction.
I said before, I missed the memo on that. I've gone for a dark blue today instead. No, all good. For our listeners, you can find out more about Appold and their latest services at their website, and I'll include links to that in the description, so go and check them out. If you enjoyed today's episode, then make sure to follow Web3 Insights on Spotify, YouTube, and across all of our socials as we conduct more episodes, for people shaping the future of Web3. So thank you so much for listening. Rob, Pete, thank you once again.
Thanks so much. Good to see you, Aaron. Cheers.
Cheers.